Okay, so what if I told you there's a way to outperform Bitcoin without even trying to predict its price? Sounds a little crazy, right? Well, today we're diving into a really cool strategy laid out by analyst Adam Livingston that shows exactly how it might be possible. This is a fascinating one, so let's get right into it. This quote, man, it just hits you, right? It perfectly captures that feeling we all have. You work hard, you save your money, but it feels like it's just melting away every single year because of inflation. Meanwhile, any debt you have, that stays heavy. It feels like you're playing a game you can't win. But what if you could actually flip that script? And that's where things get really, really interesting. Imagine a world where it's not your savings that are getting eaten away, but your debt is the thing that's slowly disappearing over time. I mean, that's the dream, right? Well, that's the exact idea at the heart of the strategy we're about to get into. Okay, so before we can really appreciate the genius of this solution, we have to talk about the problem. And that problem is currency decay. You know it as inflation. It's this simple idea that fiat currencies, government money like the dollar or the yen, are actually designed to lose value over time. Yeah, you heard that right. It's not a bug, it's a feature of the system. All right, now let's zoom in on the perfect place to see this in action, Japan. Things there are, well, they're in overdrive. They've got this insane debt to GDP ratio of 250%. I mean, just think about that. The country owes 2.5 times its entire yearly economic output. And on top of that, their currency, the yen, has been getting weaker and weaker for a long time. This combination makes Japan the perfect, let's call it a laboratory for the strategy we're about to explore. So this really unique situation in Japan sets up a kind of collision, a meeting of two incredibly powerful financial forces. And here's the kicker. They're both pushing in the same direction, and it's that combined push that creates the power for this whole engine. So on one side, you've got Bitcoin, and I love this description from the source. It's like a drunk guy climbing a mountain. It's messy, it stumbles all over the place, it's super volatile, but the long-term direction has always been up. Then on the other side, you have the Japanese yen. Think of this like a tire with a really slow, steady leak. It's just quietly losing about 2% of its value against the dollar, year in and year out. No drama, just down. Now, what happens when you combine these two? This is where the magic is. When you measure a rising asset like Bitcoin in a falling currency like the yen, the numbers just get amplified. In fact, it's pretty wild. Over the last 5 years, Bitcoin's performance in yen is nearly double what it's been in US dollars. 100% more. That's huge. Okay, so this is all great in theory, but how does it actually work in the real world? Well, there's this Japanese company, Metaplanet, that has figured this out, and the source calls it a financial cheat code, like something you'd find hidden in the system's instruction manual. Let's break it down. And you know what? It's almost shockingly simple. It's just 3 steps. Step 1, borrow yen, and borrow it cheap. Step 2, immediately turn around and buy Bitcoin with that yen. And step 3, you just wait. That's it. As Bitcoin, your asset, hopefully goes up, the real value of your debt, which is in yen, just decays. It literally melts away over time. Now, I need to be really clear about something. When we say leverage here, we're not talking about the super risky, scary kind of leverage you might be thinking of with margin calls and liquidations. No, no. This is what's called structural leverage. And here's a good way to think about it. Instead of betting on a short-term price pop, you're basically betting on gravity. You know gravity is a slow, constant, super predictable force. Well, in this financial equation, the gravity is the slow, predictable decay of the yen. And this right here, this is what makes this strategy so powerful. Because when you play this out over long periods of time, the power of compounding just takes over. It's not just addition, it's a snowball effect. The results, as the source puts it, become violent. So what's the secret sauce? It really boils down to one thing, the cost of borrowing. Just look at this. Metaplanet can borrow in that weak yen for about 4.9%. Now compare that to similar companies in the US. They have to borrow in the stronger US dollar, and they're paying way more, like 10, even 12%. That difference, that spread, that is everything. And this creates what the source calls the double engine effect. It's pretty cool. Let's say Bitcoin grows by, I don't know, a hypothetical 20% in a year. Well, you also get to add the yen's 2% decay right on top of that. So for Metaplanet, their Bitcoin asset is basically growing at 22.4% when they measure it back in yen. It's like getting a bonus. Okay, get ready for this, because here is the payoff. And it is absolutely jaw-dropping. If we imagine everyone gets the same Bitcoin growth over 20 years, a hypothetical $100 invested with Metaplanet's strategy could turn into over $2,500. Now look at the US companies who are fighting those higher borrowing costs. That same $100, it becomes just $690 or even $450. I mean, the difference is just, it's not even in the same league. It's insane. So when you boil it all down, what's the big takeaway? The key thing to understand is that this strategy has nothing to do with predicting Bitcoin's next crazy price swing. It's not about timing the market, it's about positioning. It's about looking at the big picture, seeing these built-in imbalances in the global financial system, and then just picking the right side to stand on. Let's put it this way. The game is simple. You use a hard asset to short a soft currency liability. The arena? Japan, with its unique combo of low rates and a falling currency, is the perfect place to play. The opponents? Well, that's anyone in the US trying to do the same thing, but having to fight against much higher borrowing costs in a stronger currency. And the prize? It's simple. You just get to keep a much bigger slice of the pie. And this final quote, man, it just nails it. The game isn't rigged randomly. It's rigged structurally. It's not about being lucky. It's about understanding the fundamental rules of the system. And Metaplanet, they've just figured out how to stand on the right side of that rigged game. So they're winning because of the rules, not in spite of them. So this leaves us with a really big question to think about, right? It forces you to look past the day-to-day noise of price charts and ask something much more important. In this global system where currencies are designed to decay, which companies, which balance sheets are actually set up to capture the most value over the next 10, 20 years? Because that's the real game we should all be watching.